This is the most profitable trend following strategy which I am about to show you. So if you had entered the trade here after the bullish reversal based on the cross of secondary indicator and target recent swing high, this is how the trade would turn out to be. This is a high probability setup based on the price action. But if we don't want to target swing high and swing low, this is the same entry setup, but we're gonna take 1:3 ratio. The reason this strategy is profitable because we are following a new trend at the start of each week. And I'm gonna show you step by step how to set this up on your chart. By the way, you can use any trend following indicator for entry signals. It will still be profitable. For this strategy to work, we have to change the time zone to New York time, or -4 UTC for now and -5 UTC when there is no daylight saving. Once the time zone is changed to New York, our next step will be to mark 5 p.m. afternoon time on Sunday. If you are using 24-hour chart, it is going to be 1700. And once you found 5 p.m. time, make sure to mark it with the vertical line. And after that, I'm gonna grab a horizontal ray line and draw it exactly where 5 p.m. line intersect with the TDE. Here is the trend direction setup. We are only looking for a short trade when TDE crosses from above and goes down. And when the TDE crosses from below and goes up, we are only looking for long trades. We're actually gonna leverage this TDE to find us the trend direction against the weekly line that we drew before. Basically, we will be trading two types of markets. Let's look at the range bound market, which normally looks like this. But it doesn't work like that because it often hits your stop loss. And after sweeping your stop loss, it goes in the same direction that you had planned initially. Or you can try zoning to eliminate your losses by making a better trade entry, such as on fair value gap. However, what we are more interested in is this type of market which is trending. And this is where this strategy is going to be extremely profitable. The TDE lines will help us to keep up with the trend. If the reversal happens, this is also gonna help us to follow the reversal. Earlier in the video, we already established how to find trend direction. Now we're gonna enter the trade based on this modified MACD cross, and I'm also gonna show its setting later in this video. We're gonna use the MACD cross to enter the trade by placing the stop loss 3 to 4 pips below the recent swing low. And you can target take profit for the recent swing high, or you can fix it. And I'm gonna show you 3 important setups that you need to learn to master this strategy. Plus, we're gonna keep 1:3 ratio for the trades. Moving on to the very important point, we will not enter a trade when the price crosses through the TDE lines. We are only going to enter if it respects the TDE and MACD cross happen. Or if it goes through, then we wait for the MACD cross. In the next few examples, I'm gonna explain everything. Pay attention to this trade entry. The TDE lines are above the weekly green line and the MACD is crossing. Hence, our entry setup is to go long with 1:3 ratio. Here is another important point of this strategy. When the MACD crosses without coming back to the TDE lines, we do not enter the trade unless it's a short entry setup. Here is another high probability entry. The price has reached to the TDE lines and respecting it. And there is a cross on MACD, so it's gonna be a long entry. The reason we are getting these profitable trade is because we are in a trend and we are entering on a pullback, for example like this. However, we all know our price can never go in one direction and there will be a reversal soon, and I will show you how to handle those trades. This trade is looking very profitable, but there is one mistake that we are doing. I want you to spot it. So the new weekly support line is missing, which we have to mark at 5 p.m. New York time every Sunday. So we're gonna mark that green line. This is the first trade as a loss. Third important point, we do not enter a trade if we lose a trade on the same day of the entry. But if we enter the trade today and lose it tomorrow, we can enter based on the price action. Moving on to the next trade. The TD lines are slightly in downward direction. However, as per the entry rule, when TDE is above the green line, we are only looking for the long entry on a MACD cross. Here we have another long signal, but it turned out to be a loss. Then we got another long signal, so we're gonna see how it is gonna come out. This one is looking like a loser, but after struggling a bit, it turned out to be a winner. Now, a very important thing. We have started a new week, so as per the rule, we're gonna mark the green line. First, we're gonna find 1700 New York time. Then we're gonna move our green line to the TDE lines. This time, TDE lines are below the green line, hence we're gonna go short. So far, we lost 2 trades and gained 15x because of 1:3 ratio. It looks like it is going to hit this stop loss, but eventually it is a profitable trade. Now, why do you think this thing is working out? Well, remember I showed you when the trend goes up, it pauses and becomes range bound or sideways. This is where we are now. And in order to confirm this strategy, let's apply this to any other pair. I'm gonna type USD JPY and reset the chart here and go to any Sunday and mark 1700. Well, this one looks like very close to green line, but we're gonna stick to our rules and enter the long here, provided that TD remains above the green line. Let's see how this trade plays out. Oh, we got the spike on very first entry, but it is fine as we are always doing 1:3 ratio. So even if you lose 2 trades, you're still in profit. So we're gonna go to the next trade now. Here the price is respecting the TDE lines and there is no candle with the spikes only. In fact, there are a couple of candles with the full body, hence we are going to enter long here. Here is a very important tip to maximize your profit. As we are following the trend and by using a simple technique, we can maximize our gains, and that is by moving our take profit to the next level and bringing up the stop loss to break even. So even if the price goes against you, you are not going to lose money. You can either take partial profits on 3x gain. So if you had entered this trade here and moved your stop loss to break even and add another 3x, this is how your trade would have played out. Basically, the price is trending. So we followed the trend and we had our first stop loss. But on the second trend, we maximize our profit by adding another 3x. And here is the setting of this whole strategy. First, make sure we are on 15-minute chart. This strategy produces better signal on 15-minute time frame. Next, we're gonna add the MACD. MACD has 4 components: the MACD line, signal line, histogram and zero line. Zero line actually sits in the middle of histogram. For this strategy, you have to uncheck histogram and leave rest of the settings as default. But we do not use MACD on its own. In fact, it is our entry signal which allows us to enter a trade based on the previously established trend direction. So for a long entry signal, the MACD cross should happen below the zero line, and for the short entry, it has to happen above the zero line. To establish long-term trend direction, we're gonna add trend direction EMA lines by typing moving average ribbon in the indicators tab and pick the first one and go to the indicators settings. Under the input tab, put the length 200 in each and apply the setting as shown here. So we do not use the fourth one. Now the chart is ready for this trend following strategy. Just wanted to show you today's setup based on this strategy. If we Google today's date, it is 3rd August. And I go back to the chart and reset. So on the chart, it is 3rd August here. And watch this. Same setup and it actually works. You can backtest this strategy yourself to see the result. And to learn supply and demand zones, watch this video.